Aloha, YouTube investors. How is everybody doing today? My name is David Jansen. Welcome to my channel. Today is Thursday. It is April 22nd, 2019, and I am still doing videos on earnings reports. Kind of a stock summary analysis is what we're going to be looking at in this video for IBM and Intel, International Business Machines, ticker symbol IBM, and Intel, ticker symbol INCT. Wait, is that right? Did I get that right? INTC, yes, that's right, is what their ticker symbol is. But first, I do want to ask you to subscribe to the channel if you haven't already. I do want to say mahalo to everyone who has already subscribed to my channel, has liked my videos, and continues to follow my channel. I really do appreciate it, as it does help the channel grow. And as you guys can see, I'm a small-time YouTuber, only about 6,000 subscribers, and there are tons of other people with, 1 million subscribers or 800,000 subscribers. So I don't know that I'll ever get there, but I like sharing this content with you. And maybe you can help watch the channel grow over the years to come here. But also like this video. There's a thumbs up button down here for you to hit the like button, and also feel free to share with your family and friends. And we are looking here right now because I wanted to share with you this another little record milestone, I guess you can say, that I have reached in my investment journey. Now, for the first time, I am over $24,000, almost $24,000. I was going to say $24,500, but it's actually a little bit further away from that than I would like to think, but than I actually was hoping, I guess, at this point in time. But anyway, $23,000 was where I was at in the video that I did earlier this week, the two videos I did earlier this week, if you'd like to check those out. By the way, this is trackyourdividends.com is the website that I'm using to show you this. I put all of my holdings in here, even the free stocks that I got when I signed up with Webull, Robinhood, Doe Finance. When I did a review of the public investing app, they allow you to choose your free, which they give you free fractional shares. They don't actually give you a free full share, but they allow you to choose your fractional shares up to $5, I think it is, or $2.50. I don't remember exactly. So when I did the review on that investing app on somebody's request, I chose Google. So I put all those free ones in here along with my three main brokerages, which is M1 Finance, Fidelity, and my growth portfolio with Robinhood. And we've got over $24,000 invested. And another record for me, my total gains is well over $3,000 to $3,700. Which is kind of cool to see. And I had made a mistake that I can't believe I didn't change going way back to last year. Next Era Energy, the utility company, did a stock split. And I don't remember how many shares I owned at the time when they did the stock split. But I never updated it here in trackyourdividends.com. And I'll go through this website with you guys at the end of the month is when I usually go through my buys and sells for the month. So for the month of April, any companies that I bought, added to, or sold, I will do that through using this website, trackyourdividends.com, and we'll talk about my annual income and stuff like that as well too. But so I readjusted, I put in the actual amount that I own in shares and the actual average cost that I have for those shares from the stock split, and that's where things really improved here. My annual income jumped to almost $600. This is paid dividends, by the way, and my portfolio gains jumped to $3,700. So, and I did make a couple other purchases, which we'll talk about in that video in the future here at the end of the month. So stay tuned for that one. So, but anyway, just wanted to share that with you. But let's go ahead and look at my Fidelity account where I owned shares of IBM and Intel. This is more of a dividend growth portfolio. As you can see, for the day, it was down almost 2% or 1%. For the day, and the Dow Jones, the Nasdaq, and the S&P 500 were down for the day. It's kind of some mixed news on Biden with the new tax for gains. I think if you get gains of investments of like $1 million or something like that, Biden's going to do a new tax there, 20%, 25%. I don't remember exactly what it is. And so the thought was, at least this is what I heard on the news, is that people started selling out, probably, in my opinion, going to open up a more tax advantage type account, or maybe just move that money someplace else. If you've got $1 million in gains or dividends paid to you or something like that, you can probably take that money and put it in some land, or I don't know what rich people do with their money. I'm nowhere close to that. But so with this one, I have a little over $9,300. I do have videos showing my Roth IRA and my Robinhood account. In fact, at the end of this video, two cards will be at the end of this video. One asking the question, is M1 Finance still relevant in 2021? So you can check that one out. And then my Robinhood portfolio, how it performed in 2020. So you can check that video out, and you can see the other videos that I did this week and last week, and you can see how things have grown since I started doing this in June. Was it June? May? I think it was closer to the beginning of May of 2019. But anyway, back to IBM. Let's look at them here in my Fidelity account. As you can see, I have a little over 5.5 shares of IBM. My average share price is $121.35, and the stock is trading at $141 right now at the end of the trading day for Thursday, April 22nd. So my total return is over 16% and over $109, almost $110 is my gains. For IBM, I guess it's not really luck when you wait for a stock to drop and then you add more, but that's what happened. Their stock went all the way down to like 119, 118, somewhere around there, and I added a couple more shares, and I'd mentioned that in the previous stock analysis summary video on IBM. I was like, if this thing gets to 115, 118, you might want to pick up some shares if you want to invest in IBM, but don't do it because I say it or because somebody else on YouTube or says, buy this company. It's just my opinion, because I'm not a financial advisor, I'm not an accountant or an economist, and this video is not investing advice. This is just me sharing with you my investment journey, so please do your own research. So let's see how IBM did for this quarter. This is quarter 1 of 2021. They reported these earnings on April 19th of 2021. And you can see for the first time in a long time, IBM actually grew their revenue. It was very little bit at only 1%, but it's been several quarters, 11 or 12 quarters, I think, that they have not been able to grow their revenues. So this new CEO that they have is moving things in the right direction. Revenue jumped up 1% to over $17 billion, 17.7 billion with a B is what their revenue grew to year over year. Now, these other areas here, their net income and earnings per share and non-GAAP earnings per share, they dropped. But if you look at the previous infograph that I did at the end of January, basically, these numbers were much bigger. So they were down 56% and over 60% in net income and earnings per share, and now they are in the teens. So that is good growth. I do think that some of it is because they are splitting off their two businesses, IBM. They're going to be focused more on cloud and AI and that type of and data center type stuff versus their traditional type business. So I think their numbers are going to continue to grow as IBM over the next few quarters once they completely divest that side of the business, that their older legacy side of the business. But as far as segment revenue is concerned, you can see almost 4% growth for the cloud and cognitive software systems. This is their main, mainframes and computers and stuff like that. Grew over 4%, and the global businesses services grew almost 2.5% for them in this last quarter. So they do have some debts, which is something that I do look at when I evaluate companies, but they do have over $11 billion in cash on hand. Most of this debt is probably stretched out over several years, so probably not really that much of a concern. Of course, they continue to do more acquisitions. I think I said it right the first time. Acquisitions. Now I can't say it at all. But you know what I'm trying to say, right? And it's just because they're doing this multi-billion-dollar infrastructure revamping, restructuring thing with the business and stuff. And this Krishna, the new CEO, is the one who's kind of leading all of that. He was actually in charge of the cloud services AI area, and that was really what was the only thing that was bringing money in for IBM. So the other CEO left. This new CEO comes in, and it looks like he's doing a good job. So Free cash flow up 15%, operating cash flow up 11%, and they are going to do some paid dividends. And you can see the Red Hat, which they spent a lot of money to acquire this Red Hat business here. Revenue growth of 17%. So this is kind of what they're, no pun intended, that they're hanging their hat on, is this Red Hat business. So I know, corny and cheesy, but anyway. So as far as the stock, I showed you that it was trading at $141.21. For the year, it is up almost 23%. And year to date, we're looking at over 14%. But again, some of that could be because of share buybacks. The stock did jump, I think, about 6%, somewhere around there, when they did announce the splitting of the two businesses. So things might continue to go up for IBM, especially in the next quarter, quarter two, if they report more revenue growth, because that's really what personally I look for when I'm investing in a company, and other investors look for when they're investing in a company. You don't want their revenue to keep sinking every quarter and every single year. You want it to grow, because then they can grow that dividend, they can pay you. So speaking of the dividend, let's look at that really quick here. This is all off of the website seekingalpha.com. They do have a really nice dividend yield here of over 4.5%, and that annual payout is $6.52. So every single quarter you will get, for every share, you will get, for every one share, you will get $1.63. So for me, I have 5 shares, I get the $1.63, and then for the half shares, I get a half of the $1.63. So regardless of whether you just own fractional shares or full shares, if it's a company that pays a dividend, you still get paid for those fractional shares. So right now, this is an old ex-dividend date. I'm sure they already announced another one, but you get paid it every single quarter. They're almost a dividend aristocrat status. I would like to think that they would want to get there. That means that they've grown their dividend for a minimum of 25 years. I personally am invested into this company with my 5 shares that I have, so I would love to see them get to 25 years and keep growing the dividend, but we kind of have to wait and see. And if this payout ratio is correct, which I think it is a little over 60%, I don't think it's under 60%, that is still a really good payout ratio. They're probably just not going to grow the dividend a whole lot right now until they have regular growing revenues and the business really starts to take off like they've done in the past. But let's go over to Intel, ticker symbol INTC, like I mentioned previously. And they announced their earnings today. I own a little bit of Intel as well in my Fidelity account. I have just over 5 shares, 5.153 shares of Intel is what I own. Average share price just over $47, and the stock is trading at $62.57 right now. So my total return is over 31%, almost 32%, and my total gains is over $77. So again, I was able to buy the dip on Intel and IBM, so my total return is really good. And for my Fidelity account in general, even though for the day it's down 0.98% or 99%, my total return is over $1,200 and up 16%. So, and there's not a bank out there that's going to give you a 16% return, which is one of the reasons why I like investing in the stock market. So, but let's go ahead and look at their quarterly report. This was announced today, like I mentioned, April 22nd. Not so good for Intel like it was for IBM. Intel has a new CEO as well, and they've had some struggles. I've mentioned it in previous videos when I talked about Intel not being able to get chips out. Apple isn't using their chips anymore. Apple is creating their own chips in-house for their iPhones and everything. So now Intel has to strum up business from someplace else. So when we look at the numbers here, you can see revenue was down 1%, which isn't a lot, but it is a lot because we're talking billions of dollars. But they did almost bring in $20 billion. And if they had brought in $20 billion, this number wouldn't be in the negatives, it would be in the positives. But everything else kind of was down as well too. And when you start seeing negative 41% on net income, that's not something, that's really positive. And as far as their different areas, these are the 6 areas that they make money in. Client computing is still up. This is their, regular computers, laptops, stuff like that. Mobileye is actually growing. This is their autonomous driving systems. NIO, the EV company that I own some shares in out in China, they are using Intel's Mobileye autonomous driving software, and that company is said to be a really big competitor with Tesla over there in China, and the company is moving into Europe this year as well too, or there's talks that they will move into Europe in 2021, NIO, the EV company. So if they are using Intel's Mobile Eye systems and that company continues to grow and continues to deliver cars, and the Mobile Eye artificial intelligence, autonomous driving works, then you're going to see some big returns here for Intel, which will make the stock climb a little bit as people start to take notice of this Mobile Eye thing. But this is one of the reasons why I like Intel and why I haven't sold out of them, is this could be a big deal. Now, the downside is their data center. Personally, I would think that the data center sales would continue to grow, but they've actually gone down 20%. I don't really understand that, really. It just seems like almost every company, every business is looking for data center storage, and Intel is down 20%. If they were only down 5%, I'd probably go, oh, there's probably a hiccup somewhere or whatever. Someone had a bad day. But 20%, that's, that's kind of a lot, But Internet of Things did grow 4%. So for me personally, if you're thinking about Intel for the future, for long term, for me, I'm looking at Mobile Eye and the Internet of Things. Of course, as far as chips are concerned, they're still going to be in the top 5 businesses that do chips and stuff. They just kind of need to pick up the pace and get things out. They just have kind of struggled getting their chips out in recent years here. So, but they do have a little bit of debt. Like, again, it's probably long-term debt, which isn't that big of a deal. They do have over $5 billion in cash and cash equivalents and operating cash flow of over $5.5 billion. They'll pay out almost $1.5 billion in dividends. So let's go ahead and look at the stock. And as you can see, the quarter 2 2021, they're not expecting things to be much better. You can see that for this next quarter coming up, 2020, they brought in over $19.5 billion. And for 2021, they're only expecting almost $19 billion. So still going to beat, kind of, maybe. Well, I guess not, as far as revenue for the second quarter. But hopefully they can just do better through 2021. My personal opinion, let's look at Intel as far as their stock is concerned, how it's performed recently. My personal opinion, maybe you don't want to start a position in Intel. If you own it already, like I do, probably just hold on, especially if you've got good returns on it already. If your share price is at $59 right now, or even $60 right now, I would personally, my opinion, but do your own research, I would hold on to it and dollar cost average down, buy the dips, because my personal opinion, this is probably going to fall some more. So it fell almost 2% today, fell over 2% in after hours trading. So when the market was closed in after hours trading, the stock actually fell to $61. Personally, I would think that this is probably going to fall down to 58. I wouldn't be surprised at all. I would be really surprised if it stayed in the 60s after this earnings report. But over the last year, the stock has done relatively well. It has grown 13%, and year to date, it is actually up over 27%, almost 28%. So they'll probably do some share buybacks again to prop up the stock price. But like I said, I don't even know that I would get into this company for the dividend. The dividend yield is a nice 2%, which is better than the S&P 500 ETF. But you're only getting 35 cents per quarter. So for me, I've got 5 shares, a little over 5 shares. I'm getting 5 times 35 cents every single quarter. They're probably going to grow it. According to Seeking Alpha here, it says that they've got 18 years of dividend growth. They're probably going to grow it, but how much? And if they don't grow it, then I'm really going to have to look to sell out. In my personal opinion, for me personally, I was actually thinking if the quarter isn't good for Intel, then I might just sell out of the company because I am up with it. And then if for some reason they have another positive quarter, then I'll, but if it starts dropping into the mid-50s for me, then I'm losing money. So that's a decision that I have to make personally, and for you as well too. For IBM, I would think that IBM, with this good quarter that they had, that the stock will continue to rise. And I think that the 141 is a good price to get in on if you are starting a position with IBM. But they're not flashy, they're not exciting, they're not Square or Coin, Bitcoin, Tesla, even Apple, They're more going to pay you, this decent dividend like we talked about earlier here, over 4%. This is a good reason to get in on this company and kind of just hope for good things in the future, which it seems like the CEO for IBM is kind of turning things around. So, but like I said, do your own research. This isn't investment advice. I'm just kind of sharing with you what's going on in my life personally and what I'm thinking. So until the next video, which I think is going to be Verizon and AT&T, mahalo and aloha, everybody.